Salesforce is the world's leading customer relationship management platform, offering cloud-based solutions that enable businesses to manage sales, marketing, customer service, and analytics effectively. As the pioneer and dominant player in the CRM market, Salesforce has consistently evolved its platform to incorporate cutting-edge technologies, with AI and automation becoming central to its growth strategy. With CRM stock now trading at $248 per share, Salesforce presents a compelling value opportunity for investors seeking exposure to the enterprise software leader at historically attractive multiples following significant compression in recent years. Shares are down more than 26% from their January high, at a time when the broader tech market and equities in general have been printing fresh highs. It's a glaring divergence, but one that could actually be quite interesting. Despite the recent softness, there are several reasons to think the market has this one wrong. Salesforce is far from broken, and much of the perceived downside could already be priced into the stock. Let's jump in and take a closer look. Starting with the fundamentals, it must be noted that Salesforce is firing on almost all cylinders. Its most recent quarterly report delivered its second highest revenue print on record. The company also easily beat analyst expectations on the headline numbers while delivering better than expected forward guidance. As reports go, you can't really do a whole lot better. Also, nearly 60% of Salesforce's top 100 deals from the quarter included data cloud and AI products, whose revenue grew more than 120% year over year. These numbers underline just how successfully Salesforce embeds artificial intelligence into its core platform and monetizes it with enterprise customers. Against this backdrop of growth and innovation, the stock's retreat looks particularly misplaced. It seems to have also created a solid valuation setup that any optimistic but cautious bulls will welcome. Thanks to the pullback, Salesforce's price-to-earnings ratio has dropped below 40, a level it has not traded at in years. Investors are effectively being handed an opportunity to buy a market leader with accelerating AI adoption at a significant valuation discount to one of its biggest competitors. Based on analyst estimates shown in the EPS chart, Salesforce is expected to achieve steady earnings growth over the next 3 years, benefiting from AI integration and operational improvements. EPS is projected to grow from $10 in 2025 to $14.61 by 2028, representing a solid 43% increase in total. The growth trajectory shows initial moderation, followed by acceleration, with 2026 expected to deliver 10% growth, followed by more substantial 12% growth in 2027, and robust 16% growth in 2028. This earnings growth for CRM stock is likely to be driven by AI platform monetization. Salesforce's Einstein AI and new generative AI features are creating additional revenue streams. Operational efficiency. Continued focus on margin expansion and cost optimization following recent restructuring. Market expansion. Growing adoption of CRM solutions across new industries and geographies. Platform integration, cross-selling opportunities across Salesforce's comprehensive suite of business applications. For our valuation, we'll estimate that CRM will reach $14.50 in EPS in fiscal 2028. Is CRM stock undervalued right now? Salesforce stock trades at around 25x forward earnings, which is below its 10-year historical average PE of 55x, as shown in the valuation chart. Salesforce is grappling with a deceleration in revenue and earnings growth, resulting in compression of its multiples. For our valuation, we'll use a forward PE multiple of 24x. This is below the company's historical average, which acknowledges its slowing growth profile. Regarding the next significant catalyst, Salesforce's Q2 earnings report is now less than 2 weeks away. That report could prove pivotal in flipping the narrative. Salesforce has been beaten down hard despite doing most things right, and the setup looks favorable for a rebound into the print. Technically, the picture has also brightened. The stock's MACD just flashed a bullish crossover this week, a classic momentum signal that suggests buyers are starting to return and take control. With shares bouncing off strong support and technical momentum shifting, there's a strong case to be made that Salesforce is setting up for a pre-earnings run. A strong result in early September could spark a multi-month comeback, particularly if the company delivers another upside surprise in AI-driven revenue. For a stock currently trading back at 2020 levels, the risk-reward setup ahead of earnings looks particularly attractive. Watch for shares to continue consolidating, if not gaining, around and above the $250 mark into the weekend and next week. If next month's numbers once again surprise to the upside, the market might be forced to admit they got this one wrong and that Salesforce is indeed highly undervalued. Analysts think that Salesforce stock could have strong upside today. Analysts have an average price target of around $362 per share for CRM stock, indicating they see about 31% upside today for the chipmaker based on its current share price. Despite the bullish outlook, investors should be aware of several risks that could impact CRM's growth trajectory. Economic sensitivity. Enterprise software spending could be impacted by economic downturns or corporate budget constraints. Competition intensification. Microsoft, Oracle, and other tech giants are aggressively pursuing CRM market share. AI execution. Execution risk. Successful monetization of AI features requires flawless execution and customer adoption. Growth deceleration. As a mature platform, maintaining high growth rates becomes increasingly challenging. Salesforce presents a compelling value opportunity at current levels. The tech stock's upside potential is driven by a dominant position in the CRM market, successful AI integration initiatives, and historically attractive valuation multiples that provide significant downside protection. While CRM faces the typical challenges of a mature enterprise software company, its market-leading position, comprehensive platform ecosystem, and focus on AI-driven innovation position it well for sustained growth. Investors seeking exposure to a quality enterprise software leader at attractive valuations should find Salesforce compelling. The combination of steady earnings growth, margin expansion potential, and compressed multiples creates a balanced risk-reward proposition for long-term investors. Thanks for watching. See you in the next one.